Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Please don't forget to like and subscribe and click the bell so you get a notification when we're releasing a new video. I'm sitting again on a much warmer morning, Michael.
That's debatable.
Yeah. With Michael Porter. Welcome, Michael.
Morning.
So, Michael, we were off to the races. The Fed cut interest rates, and the rand was steaming, looking like it was going to break through the 17 mark. And all of a sudden, it was complete reversal. Markets got into a bit of flurry, and I think it's an interesting one because I think sometimes events can conflate. There's two events that both could have had an impact on markets this last week, aren't they?
Absolutely, Robin. And I think, that's just the ebb and flow. Mm-hmm. So obviously the first thing is the deterioration in the Middle East, which is very concerning, especially if you're living in that part of the world. Obviously, it's not great. And but actually, to be fair, I'm actually surprised at how, in a way, little markets have reacted to that. Yes, there's been a bit of a sort of risk-off mood. So the market has retraced a little bit. But, Robin, markets scream ahead.
Yes.
And then it takes whatever event, whether it's, so the other event you were talking about was some of the Fed sort of governors coming out and sort of downplaying the pace of interest rate cuts and things like that. And, today's Friday. We will have unemployment data out of the US, which will be quite a big data point and kind of confirm whether the economy is slowing or not. But, markets race ahead and they get the wind beneath their wings and so on. Then whatever event comes out and just brings everybody back to earth a little bit. It's the same here. I mean, there's a lot of positivity going on, but it's a bit of an ebb and a flow.
Yes.
And I think sometimes you can look around the world and we can look at the Fed and say, well, it's all attributed to that. But actually, there's something happening in the Middle East. There's something happening in Europe. There's something, a local politician might have given a speech here that's been got some press time. So it's just this poiky, to use a good South African word. Everything goes into the poiky and
yes.
It all just gets mixed around.
Yes.
The mood just ebbs and flows. But we've had the JSE's had a particularly strong sort of 3 or 4 months. And obviously what has happened, I've been on holiday for a week, so while I was away, but China obviously released a big stimulus. Yes. That has had a big impact. We're quite Chinese-centric in South Africa because of Naspers and Richemont and those kind of companies that are quite dependent on China, but also all the mining companies. Yes. So we react to that, but obviously that's had a big impact on the mood globally in terms of equities, because China is such a big economy, and really they've been stumbling along for the last 3 years,
yes.
And if that's going to start growing a little bit again or getting some traction, then that's obviously good for everybody.
Yes.
But, even on the oil price, Robin, you look at the oil price, it's $75 or $76 a barrel. You've got the most aggression in the Middle East that we've seen for 20 years, 30
yes.
years.
Yeah.
You would think the oil price would be $100.
Yeah.
So it's actually amazing how little the market has reacted. And I think that's because, there's concerns about sort of demand, and that there's not a shortage of oil at the moment.
Yes.
If Libya's pumping oil, OPEC countries are pumping oil, Russian oil still coming out, and if things really escalate and things happen in the Straits of Hormuz and things like that, and you can't get the Saudi oil out or something, then we're going to see a really big shock, and that's going to have a big implication on markets because the whole deflationary or disinflationary cycle that we're going through at the moment is going to come to an abrupt end, and so that would change your expectations around rates. So I think when markets have had a good run, just taking a little bit of profit, taking some money off the table, let's not forget that the US elections are exactly a month away, I think now, on the 4th or 5th of November. It's just, if you're looking at things and saying, oh, okay, that's all looking quite nice, let me just, whoa. Yeah.
And Michael, I see that sort of some of the reporting is that more and more CEOs are coming out and optimistic. I see that they've now ramped up the number of CEOs working as part of this task team with the government. I mean, that's gone up to 140 CEOs have signed in now. and they're talking about raising another 150 million. What are you seeing in sort of your company interactions, the mood on the ground from business?
Listen, I definitely think the mood is quite positive, and I think businesses got every incentive to get behind this government of national unity and to drive not drive the agenda, but to add support. I mean, so last week they signed this sort of agreement, where they're extending the sort of the CEO involvement for the phase 2 of the reforms kind of thing, and I mean, they're talking about 3.5% growth next year. Well, that's Adrian Gore was saying,
that's the target. Yeah,
that's the target. I mean, I don't think that's achievable.
No.
But I mean, some people are even saying 2% for this year. I don't even think that's achievable given what has already happened in the first 2 quarters. But we've said it so often here, Robin. I mean, the foundation of growth is actually confidence. If you actually have big CEOs, and okay, I know these are all big companies, they're not the ones going to drive the growth. The little companies are going to drive the growth, but you have to have big business involved.
Yes.
If these guys are getting more confident and investing and doing stuff, well, it's going to trickle down to everything because, I mean, little suppliers and everything like that, they all benefit. So I think the mood is really positive. I think companies are. I think there's a slight wariness, but I think no company wants to, or no CEO wants to really be the naysayer.
Yeah.
I mean, Magnus can be the naysayer or something like that.
Not even he's the naysayer.
I think there was a sobering editorial from Peter Bruce in the Business Day 2 days ago where he just said, there's a lot of positivity, but let's just have some circumspect about how quickly things are changing, but I think that business has got every incentive to get behind them, and if they can drive it and we can get some growth going, then you start to have levers to pull to sort out some of the other problems.
Yes.
You can't. I come back to, if we don't have any growth, we don't have any tax, how do you sort out some of the other problems we've got? You need some growth to get the whole engine going, and so if we can achieve that, then really I always kind of liken it to a car, Robin. I'm teaching my kids to drive at the moment, but I've got an automatic, so they're just getting used to the feel of a car. But we've been in first gear, and then every time we try and change to second, we stall.
Yeah,
we start off in first gear again. That's what it's been like for the last 10 years.
Yeah,
if we can actually get into second and third gear, it's really exciting. So there is a lot of enthusiasm in the markets, and share prices have rallied, but we haven't yet factored in the possibility of having sustainably higher growth. And when I say sustainably higher growth, 2.5%, 3%. And obviously we've had the government in London, wooing investors and being hosted by JP Morgan and Standard Bank and things in London. And I think generally it's gone down pretty well. The comments out of London are unity, a team. There's no backstabbing between all the different members, and they're putting SA's best foot forward. And I think investors are pretty pragmatic about the challenges and things like that. But government's certainly trying to start to change the narrative, which is important. Every journey starts with a small step. So.
Well, that's exciting. Yeah. If you haven't had an opportunity to read Willy's article in Intuition, please. Don't forget to do that. It's a great article that will pick up on much of what Michael has said. Thank you for joining us. Don't forget to like and subscribe, and we'll catch you next time. Thank you. Bye-bye.